Good morning. Today we will continue our study of the plant fund. This time our focus is going to be on how to make the journal entries that are necessary for recording plant fund transactions. We're going to base our work on the document How to Make Fixed Asset Entries following the SDA Accounting Manual. Now remember, this very detailed document can be a resource. You can print it out and keep it in your desk drawer. And then anytime you need to record a plant fund transaction, you can use this reference as a cheat sheet. You won't have to memorize anything. Our approach today is going to be to review the overall principles underlying our work, and then we will work our way through a few cases to see how those principles apply. The first basic principle that we need to remember is that in the Seventh-day Adventist Church accounting system we use a minimum of two funds. The first is the operating fund, and the second is the plant fund. The plant fund is split into two subsets, which we can call subfunds. The first one is the unexpended plant fund, and then the second one is the invested in plant fund. We can call these subsets subfunds because each one behaves as if it were an independent fund. Each one has a self-balancing set of accounts, just like any other fund would have. These subfunds record the resources that are available for fixed asset purposes, and they separate out the resources that have already been spent on the acquisition of assets. The second set of basic principles that we need to keep in mind is that for every transfer in recorded in one fund, there must be a matching transfer out from another fund. Also, for every due to recorded in one fund, there must be a matching due from recorded in another fund. This principle holds true for transfers between the operating fund and the plant fund in general, and also for transfers between the unexpended plant and the invested in plant subfunds or functions. The third principle, which is actually more of a reality than a principle, is the fact that most Adventist church organizations do not maintain a cash account in their plant fund. For organizations who do not have a cash account in their plant fund, the resources for plant-related transactions are maintained in the operating fund. So we have a resource movement that looks like this. When we're getting ready to buy fixed assets, we're going to move the resources out of the operating fund into the unexpended portion of the plant fund. There they will be grouped with other liquid assets that are available for the purchase of fixed assets. At the time the asset is actually purchased, we can then move those resources out of the unexpended portion of the plant fund and over into the invested in portion of the plant fund, signifying that those particular resources are now tied up in assets and therefore are no longer available for the purchase of future assets. As you can imagine, it takes quite a few entries to record all of those movements of resources, first out of the operating fund into the unexpended plant fund, then out of the unexpended portion of the plant fund into the invested in portion of the plant fund. Fortunately, SunPlus has a simpler way of accomplishing this process while still recording all of the necessary information for the financial statements. So what we're going to do is first we're going to look at the entries we would need to make if we had to follow these transactions according to theory. And then we will look at the streamlined way SunPlus addresses the problem. But first let's take a look at our case. All of the work that we'll be doing today is going to be based on the same scenario, and that is that the organization for which we are working has decided to buy a new desk. Let's take a look at the theoretical entries that we would need to enter this purchase. First, we're going to need an entry into the operating fund. Now remember, this is the conceptual entry. We need to debit transfer out of operating, and the analysis here would be Fund 10 for the operating fund. The credit line of this entry would be to the cash account in the operating fund. And this entry will record the transfer of money to the plant fund so that it can buy the desk. Then we need to move to the plant fund side, and we need to make some entries in the plant fund. The first entry that we would need to make in the plant fund side would debit the cash account in the unexpended plant subfund. So this would be a cash account supposedly held in the unexpended portion of the plant fund. The fund in this entry would be Fund 20 because it's the plant fund. The credit line of this entry would be a transfer in to unexpended, and the fund would be, again, 20. This entry has recorded the receipt of money into the plant fund so it can buy a desk, and the receipt is into the unexpended portion of the plant fund. But we're not finished with our plant fund entries yet. Next, we need an entry that will debit transfer out of the unexpended in the plant fund and credit the cash account in the unexpended portion of the plant fund. This entry is necessary to record the payment to the desk supplier. And we also need an entry that will debit the office equipment expense in Fund 20 and credit the transfer in invested in plant in the plant fund to record the purchase of the desk. But we still aren't finished. The final entry that we need to make in the plant fund side for this particular purchase would be a debit to the office equipment expense account in the plant fund and the credit to transfer in the invested in portion of the plant fund. And this entry records the actual purchase of the desk. This is also when the desk would be set up in the asset record. So these are the conceptualized or idealized entries, and understanding them is going to help you understand the more streamlined Sun Plus method of recording this process. So to recap, if we are following the theoretical entry process for this kind of a purchase, it would require 4 entries. The first one to transfer money out of operating into the plant fund. The second entry receives the money in the unexpended portion of the plant fund. The third entry transfers the money from the unexpended portion of the plant fund into the invested in portion. And the final entry actually records the purchase of the desk. At this point, it is important that we understand that the necessary thing as far as GAAP is concerned, whether it is IFRS, US GAAP, or even the SDA accounting manual, the important thing is that the transactions are accurately reflected on the financial statements. So if your transactions are being properly reflected in your financial statements, the actual journal entries that are used to get the information to that point are not that important. So knowing that, we understand that we can take this long series of entries and we can boil it down to the essence. And as long as the information is properly recorded in the system, then it will be fine as far as GAAP is concerned. So what Sun Plus does is, using the power of the analysis dimensions, it can remove some of those middle steps in the idealized process of getting the transaction reported. So using the analysis dimensions, Sun Plus can, using 1 or 2 entries at most, perform the same functions and processes that were performed in the long series of entries in the ideal presentation that we looked at. So let's take a look and see how those Sun Plus entries work. In Sun Plus, the first entry will be in the operating fund. And once again, these are the basic case of the buying of the desk. So for entry 1 in the operating fund, we're going to be debiting transfer out of operating, and this will be in the operating fund. The credit side of this entry will be to the cash in the operating fund, and this is the entry that will record the transfer of money to the plant fund so that it can buy a desk. And you may be asking how that's possible with this simple entry, and that will be with the use of analysis dimensions. In this entry, the operating fund has paid the desk company directly. Then we need an entry in the plant fund side. In the plant fund, we will be debiting office equipment in the plant fund, and we will be crediting transfer in. And this transfer will be into the invested in plant from unexpended plant. Once again, that will be handled using analysis dimensions. And this is the entry that is necessary to record the purchase of a desk in the plant fund. And this is when the desk itself would be set up as an asset record. To recap, this entry records the actual asset, it sets up the necessary transfer in, and it moves the resources from the unexpended portion of the plant fund over to the invested in portion of the plant fund. These streamlined entries are going to produce exact same results for the financial statements as the much more drawn out and labor-intensive conceptual entries that we discussed earlier. These entries also are going to ensure that the transfers in for one fund have a matching transfer out in the other fund, so they meet our basic requirements. Because organizations will handle the processing of resources for the purchase of fixed assets in slightly different ways, we are now going to examine 5 separate sets of circumstances and how they would impact the way this purchase is actually recorded in the SunPlus system. So the first case that we're going to take a look at has 4 basic variations on a theme. Now let's suppose I bought the desk for $2,400. Now how do I record the purchase if the money for it came from the operating fund, never to be repaid by the plant fund? In the first variation, unrestricted and unallocated tithe resources in the operating fund are the type of resources that will be used for the purchase of this desk. In the second variation, the operating fund is purchasing the desk. The plant fund will not be repaying the operating fund, but this time unrestricted, unallocated, non-tithe resources in the operating fund are the resources that are being used for the purchase. In our third variation, variation C on case 1, the operating fund purchases a desk. The plant fund will not be repaying the operating fund, but this time the resources came out of departmental budgets. And in the fourth variation on case 1, restricted or allocated resources in the operating fund placed there for the specific purpose of a particular function, such as evangelism, are the resources that are going to be used to finance the purchasing of this desk, which is made, once again, by the operating fund, and the plant fund will not be expected to repay it. In case 2, the operating fund provides the resources for the purchase of the desk, but this time the plant fund is expected to repay the operating fund for the purchase. Resources specifically donated for that purpose, for the purchase of the desk, to pay for the desk. In the fourth case, the plant fund is going to purchase the desk using money that has already been previously recorded into the plant fund. So in this case, they would have a cash account for that purpose. And then the fifth case is, how do I record the donation of a desk instead of a purchase? So we don't have to purchase the desk at all in the fifth case because someone has kindly donated it. So let's start by taking a look at case 1. Now remember, in case 1, I need to purchase a desk, and I'm going to use resources that have been maintained in the operating fund for this purchase. And the plant fund is not going to repay the operating fund for the desk. This is the most frequently encountered scenario in the SunPlus world. So the question to be considered first is, where is the money coming from? What type of money is going to be used within the operating fund? Now remember that our choices are, will it be unrestricted and unallocated tithe, unrestricted and unallocated non-tithe, departmental budget resources, or restricted or allocated monies that have been reserved for a specific function. And we have provided a chart for you that you can print out and keep that might help you in understanding this. So in variation A on case 1, the money to purchase a desk is coming out of operating fund using unrestricted, unallocated tithe resources, and the plant fund will not repay the operating fund for the purchase. So, our first entry will be on the operating fund side. We are going to debit account 997110. This is the transfer between funds account. The fund, of course, will be 10 because this is the operating side. The function is going to be UFTF, which is the function code for unallocated tithe. The restriction will be 31, which is the code for unallocated tithe. Now, because it's a transfer, we need to have the other side of the entry marked very clearly using an analysis code on this line. So we're going to use a TFWW, a to, from, who, where code of 20 for the plant fund because the money came out of Fund 10 and it's going to be going into Fund 20. Also, because it is a transfer, we're going to require the flag analysis dimension to be set as well. And the flag that we need coming out of this debit would be an out because it's going to indicate that the money is moving out of operating fund and into the plant fund. The credit side of this entry will be to the bank account, so it will be a 102 something account, and this is the account for the cash account in whichever bank you're going to use. And the only analysis we need here is fund, which would be Fund 10. This records a transfer of money from the operating fund into plant fund unexpended portion. The second entry will be the plant fund side of the entry of the transaction. We are going to debit the equipment account, and so we are going to debit account 205, which is the furnishing and equipment, or possibly equipment and furnishing, however the wording is in your chart of accounts, account. This time the analysis code for fund will be 20 because we're working on the plant side. The credit side of this entry will be to account 997110, which is the transfer between funds account. This time the fund analysis will be 20 and the function will be UFIN, which is the code for unallocated investment in property. The restriction code will be 31 because, remember, we're using unallocated tithe, and the TFWW code will be 10, showing where the money came from. The flag code, because this is the transfer account, we require a flag. The flag will be in, indicating the resources have come into this account. This entry records the purchase of the asset itself. This is also when you would set up the asset record for the new desk. And those are the only entries that we need for this particular variation on the case. Now let's look at variation B of case 1. Money to purchase the desk is coming out of the operating fund, not to be repaid by the plant fund. But this time, the resources that are going to be used for the purchase of the desk are unrestricted, unallocated, non-tithe resources. The entry on the operating fund side is a debit to account 997110, the transfer between funds account. The analysis code for fund here is going to be 10 because remember this is the operating side. The function will be UFNT because we need the code for unallocated non-tithe this time. The restriction will be 35, the code for unallocated non-tithe. The TFWW, because this is the transfer account, is going to be 20, and the flag will be out. The credit side of this entry goes to the cash account, so it will be a 102 something account depending on the code for the particular bank whose cash account is being used. And the only analysis we need is for Fund 10. This records a transfer of the money from the operating fund into the plant fund unexpended portion. The second entry on the plant fund side is a debit to the furnishing and equipment account 205 with an analysis code of 20 for the fund. The credit on this entry is 997110, the transfer between funds account, with a fund analysis code of 20, a function of UFIN, unallocated investment in property, a restriction of 35 for the unallocated non-tithe, a TFWW of 10, and a flag of N. And this entry records the purchase of the new asset itself. This is when we will set up the asset record for the new desk. In variation C of case 1, the money to purchase the desk is coming from the operating fund. It will not be repaid by the plant fund. But this time the resources for the purchase are going to come out of departmental budgets. It's very important that we pay careful attention to which department is providing the money. And that is because the classification of the department and whether or not it is allowed to use tithe funds to make these purchases becomes very important and comes into play. For the entry on the operating fund side of this transaction, we're going to debit account 997110, our familiar transfer between funds account. The analysis that needs to be attached here is Fund 10 for operating. The function and restriction will depend on the classification of the department. It will either be unallocated non-tithe or it will be unallocated tithe, depending on the department. So if it's a Sabbath school department, it would probably be a tithe fund. If it is a cafeteria department, it would probably be non-tithe. So we're looking at a UFNT or UFIN for the function and the restriction of either 31 or 35, depending on the department. The TFWW needs to be entered here on the debit side, and that would be Fund 20, and the flag would be out. The credit side of our entry in the operating fund would be the cash account, so it will be a 102 something account, depending on the cash account that was being used. And the analysis code here that we need is the Fund 10. This entry records the transfer of money from the operating fund to the plant fund unexpended portion. Next, we'll need an entry on the plant fund side, and the debit here would go to account 205-205, the furnishing and equipment account, with a fund of 20. The credit side would be to account 997110, transfer between funds. The fund will be Fund 20. The function, once again, is going to depend upon the classification of the department, whether it is tithe or whether it is non-tithe, as will the restriction. The TFWW will be 10 and the flag will be in. This entry records the purchase of the asset itself, and this is when we would set up the asset record for the new desk. In variation D of case 1, the money that's going to be used to purchase the desk is coming from the operating fund. The plant fund will not be repaying the operating fund for the purchase. But this time, the resources that are being used are restricted or allocated resources. The entry on the operating fund side would be a debit to account 997110, the transfer between funds account. The fund here would be Fund 10. Now, whenever the resources carry either a restricted or allocated classification, you're going to need to use the allocated function's function code as the function. If this particular entry were related to the allocated function of evangelism, the function code here would be AFOEVANG01. The restriction code will depend on the particular type of resources that have been set aside. The TFWW code here will be 20 because we are moving funds into the plant fund, and the flag will be out. The credit side of this entry will be to the cash in the bank account, which will be a 102 something, and the fund will be 10. This entry records the payment to the desk supplier, and it also records the transfer of money from the operating fund to the plant fund unexpended portion. Next, we'll need an entry in the plant fund. So we will begin by debiting account 205-205, the furnishing and equipment account, and we will enter an analysis code of Fund 20. The credit side of the entry will be to account 997110, the transfer between funds account. The fund will be 20, and the function will be UFIN, or unallocated investment in property. The restriction will depend upon the identity of the department. The TFWW will be Fund 10, and the flag will be in. Now, there are two schools of thought about recording the purchase of an asset from departmental expenses. In the first school of thought, you would charge the department directly, and the function here would be the department. Dr. Tennyson has always charged the department directly, and he never had any problem with his reporting. The beauty of that is that you see it on the departmental report as going out, and it shows that the purchase is well within the department's budget. So that is the school of thought that Dr. Tennyson recommends. The second school of thought is to transfer the resources out of the department back into unallocated and then buy it out of unallocated. So that was case 1 and its 4 variations. Let's move on to case 2. In case 2, the money for the purchase of the desk is going to come from the operating fund, but this time the plant fund will repay the operating fund for the purchase. In this case, the plant fund may actually have a cash bank account. They may be funding depreciation, but the bank account normally used by this organization is the operating fund bank account. So the operating fund is the one that will pay for the purchase. In essence, the operating fund is going to loan the plant fund the money for the purchase. The plant fund will buy the desk and will show a liability until it repays the loan. Now in case 1, you will recall that we used a transfer out and in account. This time you're going to notice that we're using a due from and to account. You may be wondering what the difference is. Remember that in case 1, the purchase was made by the operating fund, but the plant fund was never going to repay the operating fund for the purchase. So in that case, we needed to transfer on a permanent basis resources from the operating fund over to the plant fund. In case 2, the purchase is still going to be made by the operating fund, but this time the plant fund is expected to repay the operating fund for the purchase. Therefore, the plant fund will owe money to the operating fund until the repayment is made. So the operating fund creates a liability. Now remember what we said earlier in the video. Every time you have a due from, you must also have a due to in another fund. Once we made an entry creating a liability in the operating fund, we are obliged to make a follow-up entry which credits the due to, but this time in the plant fund. So let's look at this in the Sun Plus context. And remember that in the Sun Plus context, there are few organizations who actually have a plant fund cash account. So in this context, the entry is going to be on the operating fund side, we're going to debit account 191110, which is due to from operating plant. And the analysis that we need for this side of the entry is Fund 10. The credit side of the entry will be to account 102 something. This would be a cash in the bank account. And the analysis that we need would also be Fund 10. This records the payment to the desk supplier. Notice that in this entry we created a check for the desk supplier directly from the operating fund and recorded the loan to the plant fund as a receivable from the plant fund. Now we need an entry on the plant fund side. The debits entry will be to account 962110, which is the payment for assets account. And the fund this time is going to be plant fund, so Fund 20. The function here will be to NOUFAE, which is the unexpended for furniture and equipment account. The restriction will be 01 for unrestricted non-tithe. Now in this entry, notice that we're using a function for unexpended for furniture and equipment. The unexpended side of the plant fund is the side that owes the money to the operating fund. Remember that the liquid resources to be used for the purchase of fixed assets moves from the operating fund into unexpended plant fund. And then later on, when the liquid asset is turned into an actual asset, the money moves from unexpended into invested in plant. So the function here is NOUFAE, the unexpended for plant, for furniture and equipment function. The credit side of this entry will be to 191110, the due to from operating plant account. And the analysis that we need is Fund 20. This records the purchase of the desk in the plant fund. We need to make another entry in the plant fund. This time we're going to debit the account 205205, which is the furnishings and equipment account, with an analysis code of Fund 20. The credit side will go to 773225, the asset acquired account. And the analysis that we need is Fund 20 and a function of NOIFAE, investment in furniture and equipment, with a restriction of 01 for unrestricted non-tithe. Notice that this time the function is invested in because we've actually turned the liquid assets into an actual physical asset. And this is where we will also set up the asset record. So basically, in the SunPlus context, we have three parts to the process. We set up the receivable in the operating fund, we set up a payable in the unexpended portion of the plant fund, and then we set up the fixed asset in the invested in plant portion of the plant fund. So that is case 2. Now let's move on to case 3. In case 3, the money for the purchase of the desk comes out of the operating fund, using resources that have been specifically donated for the purchase of a desk. So this is slightly different. We've got a specific donation to buy a piece of equipment. Now the operating fund is buying it. The plant fund is going to repay the operating fund, but they're going to repay the operating fund with money that was specifically donated for this purpose. So let's look at this in the SunPlus context. Since there are few organizations that use SunPlus who actually have a plant fund cash account, in the SunPlus world we would assume the donation was deposited into the operating fund cash account and the operating fund purchased the desk. So the entry on the operating fund side is a debit to account 102 something, the cash in the bank account, with an analysis code of Fund 10. The credit side of this entry would go to account 191110, which is the due to from operating plant account. And again, the analysis would be Fund 10. This records the collection of the donation. So when the donation came in, we recorded it in the operating fund, and we tagged it as a restricted donation. Then the operating fund went ahead and bought a desk. So then we debited cash when the money came in, and it was recorded here as a liability to the plant fund. In the second entry, we will be working on the plant fund side. This is a debit to account 191110, the due to from operating plant account, and the analysis that we need is Fund 20, function NOUFAE, which is the unexpended in plant function, with a restriction of 75 because these resources have been temporarily restricted. The credit side of the entry would go to account 638110, the donation revenue account, and the analysis that we need is Fund 20. This records the donation coming into the plant fund. So this is a receivable of the plant fund, and it corresponds with the payable of the operating fund. The money has come in, and it is recorded as a revenue of the plant fund in the unexpended portion, and it is temporarily restricted. Then, when the desk is actually purchased, we need to make the following entries. In the operating fund, we need to debit account 191110, due to from operating plant, with an analysis of Fund 10. The credit side will go to account 102 something, the cash in the bank account, with an analysis of Fund 10. This records the payment to the desk supplier, and it brings the balance in the 191110 account to 0. At the time of purchase, the operating fund will write the check to the desk supplier and debit the payable to the plant fund. The payable to the plant fund is reduced by this debit, and the plant fund will reduce their receivable from the operating fund and record the payment for the asset. The entry on the plant fund side would be a debit to account 962110, the payment for assets account, with an analysis of Fund 20, a function of NOUFAE, unexpended for furniture and equipment, and a restriction of 75, temporarily restricted. The credit side of this entry will go to account 191110, the due to from operating plant account, with an analysis of Fund 20, and this will record the purchase of the desk. We're going to need a third entry to record the actual equipment itself. So we're going to debit account 205205, the furnishings and equipment account, and use an analysis of Fund 20. The credit here will go to account 773225, assets acquired, and the analysis for this side will be Fund 20, function NOIFAE, the investment in furniture and equipment, and a restriction of 75 for temporarily restricted. This entry will record the purchase of the desk, and this is when we would set up the asset record. So the debit here goes in the unexpended plant portion, and the credit goes in the invested in plant portion, satisfying the receivable and moving liquid resources over to the invested in portion of the plant fund. Let's move on to Case 4. In Case 4, the money for the purchase of the desk comes from the plant fund, using resources that have been previously recorded in the plant fund. This is the simplest and purest of all plant fund entries because the operating fund is not involved at all. The first entry will be, of course, in the plant fund. This is a debit to account 962110, payment for assets. The analysis that we need is Fund 20, function NOUFAE, an expended in plant function, and the restriction is going to be either 01 or 31, depending upon the type of resources that were used for the purchase. The credit side would be to account 102 something, the cash in the bank account, and the analysis would be Fund 20. This records the purchase of the desk. Now the payment for assets account that we used in this entry is an unexpended in plant account. Remember, the unexpended portion of the plant fund is where the liquid assets are maintained. The second entry will also be in the plant fund, and this is a debit to account 205, the equipment and furnishings, with an analysis of Fund 20. The credit side will go to account 773225, assets acquired, also in Fund 20. But this time the function is going to be NOIFAE, invested in plant. The restriction will still be 01 or 31, depending on whether tithe or non-tithe resources were used. This records the purchase of the desk. This is also when we would set up the asset record. Assets acquired, the account used for this side of the entry, is only used in the invested in plant side of the plant fund. It is used to balance out the purchase of an asset in the invested in portion of the plant fund. So the first entry here was made to the unexpended portion of the plant fund, and then the second entry was made to the invested in portion of the plant fund. Now let's move on to Case 5, our last case. In Case 5, the organization doesn't even have to purchase the desk because a very nice person donated a desk. So the entry will be solely in the plant fund. So we're going to debit account 205, equipment and furnishings, with an analysis code of Fund 20, and we're going to credit 638110, donated income invested in plant. Here the analysis would be Fund 20 and a function of NOIFAE, invested in plant. The restriction would be 01 or 31. So those are our 5 cases. Here at the end, let's look at the entry for depreciation, because it's related to the plant fund. Now depreciation is extremely simple in the SunPlus world. So we know that the asset is recorded in the invested in plant section, so we have to debit depreciation expense over in the invested side of the plant fund and credit accumulated depreciation. So our entry would go like this. The debit would be to account 903205, which is the depreciation expense for equipment and furnishings. And the analysis that we need is Fund 20. We need a function of whatever department is using the asset, and the restriction would be 01 or 31 depending on the identity of the department. The credit side of the entry would go to account 209205, which is the accumulated depreciation, furnishings, and equipment account, with an analysis of Fund 20 and a restriction of 01 or 31. And that is the entry for depreciation. So those are the most likely scenarios in which plant fund journal entries are made. The bottom line is, if Dr. Tennyson were an accountant using the SunPlus system, he would familiarize himself with the content of this document or this video so that he would have a general understanding of what's going on in the accounting, and then he would print out the document and he would keep it as a resource. And any time a plant fund transaction occurred that he needed to record, he would just pull out the document and he would look at the appropriate case and then he would just follow the modeling for that particular case, whatever applies to the transaction he needs to record. So that concludes this portion of our plant fund discussion. Thank you so much for coming along with me. Sorry that it got a little boring there for a while, and we'll see you again next time.